What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 30. It's November the 21st, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about the overall type of day that we were trading. So today was a range-bound day, and the range traded in between 35,100 at the bottom at this red line right here, and then between 35,150 and 35,160 at this red line up here, followed by this blue line right above it. Now this is pretty interesting because before we get into what actually went on in today's session, we need to talk about what the overall market was like leading up into today's trading session at the New York Open. Now what's really interesting is the fact that we formed a bigger range before we formed this smaller range that we actually traded in when the market opened. But before that, during the pre-market hours, notice how we were trading in this zone right here between between 35,195 and then a low of 35,160. So we pretty much bounced back and forth between that range for a good amount of time during the London session, and then when the market opened at 9:30, we saw that big sell-off that led to today's trading session. So that's very important to understand, because not only has the range been going on today, but the range has been lasting for a few weeks now, and it's been almost like 3 out of 5 days every week for the past 3 weeks that we had range bound days. So it was important to understand the overall context of the market, because that would help me later on today when I was taking these trades that I did. So let's go ahead and get right into it, and let's talk about the first trade that we made today. So trade number 1 was right here, followed by trade number 2. So right here I went long, expecting for the higher low support at A right here to hold up, but I was too early. And the thing about it is, when you have two higher lows that are in close proximity to each other, like 1 right here and 2 right here, you really need to just go long towards the lowest level of whichever higher low comes first. So since this higher low had a lower price, this was the one that I should be buying from instead of this next higher low that got established just a little bit above it, because for me that made the biggest difference. Because if you look at where I got in at, I went long at the blue triangle, and look at where my stop was. My stop was literally right here at support. So if I would have bought at the place that my stop was located, I would have been good on this trade and would have been able to take prices back up to the top of the range. So making sure that you get in at the lowest prices when you're buying is very important. Just because you feel like you know where the market is going doesn't mean that you can just get in at any specific price. You got to get in at that best possible price, and when it comes to going long, you want to buy low and sell high. So that's very important to remember. So then on 2, I decided to add more to trade number 1. But like I was talking about earlier, you should buy the lowest higher low when there are 2 higher lows in close proximity to one another, and that's very, very important to remember. So then we move on. We see prices kind of respect this higher low that got formed right here, and then they pushed all the way back up to the top of the range. As soon as they hit the top of the range, they got rejected, came back, and created a lower high. Now before they created a lower high, I did go long right here at 2A. So I went long right here based on the higher low, but I got out at break even when I realized that this was the first higher low after prices hit the top of a trading range. Now this was a trade that I took a loss on the other day because I saw a higher low towards the top of the trading range, and I went long because it just looks so appealing. But what I've been learning over these past few weeks is that even if you see your higher low setup, if it comes near the top of a trading range, you really want to avoid that. So once I realized my mistake on 2A, I was like, that doesn't look like a higher low that I should trade. So prices actually gave me a second chance. They came back to my break even price, and as soon as they did that, I got out, and I was like, dodged the bullet right there. Because if I would have tried to hold on to this long trade, prices would have came all the way back down to the bottom of the range, and I would have gotten stopped out for a full stop loss. So I got out right there when I realized my mistake. So I made a quick decision and made the right decision. Now on trade 3 right here, I went long based on the higher low from B. The only thing was, this wasn't the strongest higher low to go long at. The wick was way too extreme. And when I say the wick was way too extreme, this is what I mean. So let's look at B right here. You see how prices came back and they tested the bottom of the range, and then they wicked all the way back up and closed right here just for the next following candle to push all the way down and wick back up once again. And then the third candle, the one that I circled up expecting that to be the higher low, we wicked all the way up to the upside, but came all the way back to close not too far away from the same spot that we opened. So at one point in time, this candle was all green and it looked like a really good higher low setup. But the close of the candle is always important when it comes to that higher low, because you always want to make sure that the candle doesn't close too close to being a doji. Now this isn't a doji per se, because it's not exactly a open and close on the same price value, but it's close enough where we can consider it to be an almost doji, and that's good enough for me. And one thing about the higher low strategy is that if you ever see a doji, you just want to avoid that entire higher low section, because a doji represents indecision. One of the main reasons that causes the higher low strategy to work and be successful is the fact that it's a whole lot of buying going on, and everybody is pretty much coming in and adding to their positions or opening up new positions at that price level for the higher low. So you want to make sure that everybody in the market is participating. And when you see a doji, that just means indecision, which means that not everyone that could participate would, and that decreases the chances of the long trade working when that higher low pops up with a doji. So that's very important to remember. And that's pretty much the reason why I took that loss on 3, because the doji is just not strong enough to use it as a support level for a higher low. And that's very, very important to remember. So after I got stopped out at trade 3, prices came all the way back to the bottom of the range once again. And then we formed a little micro range in between this level right here at 35,120 all the way back down to the bottom of the range at 35,100. So we played around in this zone for a good little minute, and then we finally made a higher low right here. So I went ahead and circled it up, drew my level of support across it, and then on trade 4, I just went long as prices came back to retest the support level from the higher low at C. So once we got that bounce, I held that trade, and trade 4 was a very good entry. I was proud of my entry, but what I want to talk about is the trade management, because I came back on trade number 5 and I added to the position that was already open from trade number 4, which is a good idea. Like, the concept that I had was solid, but the execution was flawed. And I say that because whenever I get into a new position, I need to treat it as though I'm not even in a long trade right then, right there. Because if I wasn't participating and I didn't go long at trade 4, it's no way in my right mind I would have went long at 5, because I would look at it and say, oh, we're near the top of a swing. That's not the place I want to go long from. If anything, I should go long from either the bottom of this higher low or this one that got formed right after at point number D. Now, the reason I went long at 5 was because I kind of let the profits from trade 4 just make me a little bit too relaxed, because I saw the profits running up and I was like, oh, okay, I see where it's going. It's going back up to the top of the range. So does it really matter where I get in from? I can just go long anywhere, right? It doesn't matter. It's going back up to the top. But even though you feel like it might go back up to the top, which it did, you still got to make sure that you get in at the right possible prices and the right levels, because I trade with a very tight stop, which means that if I get in at the swing high, more than likely my stop will be located right there at the lows from the higher low where I should be going long at. And that's pretty much the same problem that I ran into on trades 1 and 2. So that was a problem on 1, 2, and 5. So that's the biggest lesson that I really learned today, which was that if you want to add to a position, add to it, but only add to it in a spot where you would still open a new position, even if you wasn't in a position already. And that's what I learned right there at 5. So at 5, I shouldn't have went long at the highs. Instead, I should have went long at D. So this trade eventually ended up being break even, which was really tough because I saw what 4 was doing. And once I saw that higher low, I was like, okay, cool. I know how the zone, I know how the trading range works. Usually a trading range will give you a higher low after it respects the lows of that trading range. And then that higher low should eventually push prices all the way back to the top. So I was pretty tight when I saw that this trade came back to break even, just to see prices come all the way back up to the top. But that's a tough lesson to learn, and I learned my lesson for sure, which is if you want to enter into the trade, make sure you enter and add to it at a price level that makes sense, that you would usually add to if you weren't in a position already. So after prices came back to hit the top of the range up here, we formed a lower high. So once I saw that lower high, that pretty much started getting me into the zone where I'm starting to look for my range bound setups when I'm looking for a short. So basically what I like to see is I like to see prices come back, retest the top of the range, and then once they make that first lower high back inside of the trading range, I want to short that lower high and then look to take prices all the way back down to the lows of that trading range that I'm trading on that specific day. So right here, we had a few things that happened at trade 6 that made this a really good entry and a really good trade. So first and foremost, let's talk about the fact that this was the first lower high created after prices respected the top of the trading range. So that's signal number one. And then also prices broke past the higher low that was created near the top of the trading range at E. So I pretty much took the lesson that I learned on 2A and applied that over here at the higher low from E, because at 2A, this was a higher low, but notice how this was the most recent higher low. Well, the last higher low before the top of the range got hit. This one was the first higher low after the top of the range got hit. So they're very similar in terms of how they act up there at the top of the range. So I was like, okay, if 2 gave us a lower high and then we sold off, it will only make sense that if we had a lower high over here plus a break of a prior higher low, that we might sell off. There's nothing guaranteed in the market. So I was just operating really based on probabilities and what I've seen in the past. And usually when you have that first lower high after you break into that trading range, more than likely you're probably going back down to the bottom of the range somehow, some way. So that's pretty much what I was looking at trade 6. So I said, okay, instead of me going long right here at this higher low like I want to do, let me just wait, sit back, and see what the reaction is. And as soon as prices came back to that higher low, they shot right past it on this red candle right here. And that was pretty significant, because that pretty much, when you add that into combination with the fact that we had a lower high and then they shot past and broke right past that prior higher low, that indicated that it wasn't really that much buying pressure in the market, and there was a whole lot more selling than it was buying. So right here at E, what I was trying to do was a replication of what I've done in the past. So let's just go through a couple of examples and just get an overall gist of exactly what I was trying to do right here. So we go back to November 17th. We also had a range bound day. Now look at what happened up here at D and E. Notice how once we came back to the top of the range at 35,017, we made a lower high right here. Now I messed up on this day on November 17th. I was trying to buy this lower high, kind of like how I tried to buy this lower high today at 2A. So that's still something I'm working on, but hey, every day is a day to get better. So I traded it wrong on this day. I went long right here, but when I look back at this chart, when I saw the lower high, I was like, dang, why did I go long right there if I saw the lower high as prices broke back into the zone? So that's pretty much what I was looking for. Notice how once they hit the top of the range and made that lower high, they sold off all the way back down to the bottom of the range. The same thing happened right here. They had a false breakout past the top of the range, came back, created a lower high, and that lower high eventually led us all the way back down to the bottom of that range once again. And we had a very similar scenario over here towards the right side of the chart at 12:15. Notice how we had a false breakout past the top of the zone, right? Came back in, created a lower high right here that brought us all the way back down to the lows of that trading range. Now, if we go back to November 16th, a very similar scenario also, where we had another range bound day. Notice how at trade 2, we had that higher low right there, but look at how the higher low got formed right above the top of the range. So on this day in particular, the range spanned from this blue line up here at the top at 35,075 down to this blue line at the bottom at 34,950. So notice how this higher low came right at the top of the range, and then the buying really never came back in. So if you went long like I did right here on trade 2, expecting for that higher low to hold up, you would have took a loss. And we saw the same scenario today, right? On 2A, where if you're looking to trade that first higher low after the top of the range gets hit, it increases the probabilities of that trade not going your way. But what I want to talk about right here is the fact that once prices made this first lower high right here after they broke back into the trading range, look at what they did. That lower high led to prices eventually coming all the way back down to test the bottom of the trading range once again. And the last example that I want to show is this trading range from August the 9th. Now, look at trade 3. As you can see, like on all of these charts that I'm showing you, one of the main things that I got to work on is not buying that higher low at the top of the range, because it's just so tough, because I see the higher low and I see that prices are moving up and I'm like, ooh, I got to get in. But that's the trade that I really got to avoid, as we can see right here on trade 3. But look at how once we break back into the range today, so the range on this particular day from August the 9th was from this green line at 35,420 back down to this green line down here at 35,360. So once we broke back into the range, we made this first higher low right here at trade number 4. So let's read the notes for that one. So I shorted the first lower high that I saw once prices broke back below the zone, and then I took prices back down to the bottom of the trading range. So that's pretty much my textbook trade when it comes to shorting the trading range that comes back to test the tops. That's exactly what I look for. I look for that lower high to get established, and then I look to short it as prices come all the way back down. So that's pretty much the mentality and the mindset that I had right here on trade 6. So once I saw the higher low from point E get broken through, I waited for prices to come back and retest the prior higher low support level. And once they did that, I entered short right here and was looking to take prices not all the way back down to the bottom of the range, because I just felt like this higher low right here from trade 4 that we went long from, that might act as some type of resistance, you know, because I was trading the other day on November 16th and we ran into a very similar scenario where, yeah, I shorted after the first lower high that got established as prices broke back into the zone on November the 16th. But prices came all the way back down to retest this first higher low that got established after prices bounced off the bottom of the zone, well, bounced off the bottom of the range right here towards the lows of this entire swing. So we came all the way back, retested that, pulled back, and then we came back and hit the bottom. And that's exactly what happened today too. So I was like, you know what? I could hold it, but it's just something telling me to just get out right here because that's where it makes sense to me. So that's where I got out on trade 6. But before I got out on trade 6, I also added to my position. So this was a very similar scenario to what I did at 4 and 5, except just switch everything around. On 4 and 5, I was going long and looking to add to my position and take prices back up to the top of the range. But on 6 and 7, I was going short, looking to add to my position and take prices back down to the bottom of the range. Now this time I added to my position from the right point on the chart, because I was like, okay, if I added at the wrong point on trade number 5, let me wait for an area where if I wasn't even in trade 6, I would still open up a short anyway. So what really poked out to me and stood out right here was the fact that this, let me zoom in because this candle is very important. I want to talk about it. So let's look at this one candle right here. All right, right here. So notice how this candle shot all the way down after this lower high was created. Now, what's really interesting and significant about this candle is that if you scroll all the way down, this candle right here that we're talking about had one of the highest volume prints throughout the day right here at point number F. Now, whenever you have a high volume candle, it can usually act as some type of pivot point, and I think that's what the notes say. So let's read that real quick. So right here at 7, I added to trade number 6 after prices broke past an area that saw strong demand but no follow through. A high volume candle can be a key pivot point in the market sometimes, and the reason that happens is because when volume comes in, that's the market telling you that it was a lot of business done on this candle between whatever range that candle spanned across. So that's telling us that for whatever reason, it was a lot of demand that came into the market right here, a lot of buying. And then that's validated by the fact that we had prices respect that level for the next 1, 2, 3, 4, 5, 6, for the next 7 minutes. And they wicked off of that level multiple times. So you can see that the buyers are trying to do something. The buyers are trying to go long right here and trying to push the market higher, which they did for a little quick second, but they had no follow through, which means that they had one push and then that was it. So once they had that one push and then still broke back past that candle, I'm like, we just broke past the lows of a high volume candle after the market really tried its best to try and push prices up from there. So that right there is a rejection of the buying that's coming in, which means that anybody who went long right here, once they see this candle right here, they probably gonna say, oh man, it's going back down to the bottom of the range, so let me sell it and get out before I have to take a full stop loss. So that's one of the reasons that you see prices start to sell off right here and come all the way back down to retest this prior higher low that we established at D. So once I saw that high volume candle get broken through, I said, okay, if prices ever come back to retest that level, that's exactly where I would want to short from, because for one, we had a break of a high volume candle, and also in terms of price action principles, whenever you're in a downtrend and you see prices break past what used to be a prior support level, that level of support then becomes resistance. So you should expect for the market to come back up, and if the downtrend is legit, it should retest that level, and then the sell-off should continue. And that's exactly what happened at 7, and that's why I decided to add to my position right there at trade number 7. So I added right here, and then I just took it back down to the same profit target that I had in mind for trade number 6. And that was my last trade of the day, and I decided to call it a wrap after that. So I would say overall today, I definitely learned a lot about trading ranges, because it's one thing to know exactly what you need to do in a range, but it's another thing to actually come out and do it. Now, I feel like in terms of my trades and what I was actually looking for and trying to play the range, I feel like I did a very good job on that part. But where I could improve is definitely making sure that I get in at the right prices whenever I do get in. So that pretty much goes back to trades 1, 2, and 5, and 3 also. We can throw that one in there too, but 1, 2, and 5 specifically, because 3, that's just a loss that I would have took that loss anyway, no matter how it went. But for 1 and 2, these were trades that should have been successful if I would have executed the right way. So these were trades where my idea was right, but my execution was wrong. So that's something that I got to clean up. Trades 1, trades 2, and trades 5. I just got to remember, if I'm looking to go long towards the support level, and don't go long at higher prices, no matter how appealing the situation might be, no matter what the market scenario might be. Always go long from lower prices, and don't ever budge on that. No excuses. So that's what I need to work on, but I feel like if I can clean that up, I should be able to perform a lot better in range bound days. Now, today was still a good day. I ended the day in profit, so I'm happy about that, but I still got some things to work on. And yep, I think I'm gonna leave it there with you guys today. It's pretty much all I got for you guys. I hope you learned a lot about trading ranges and how to use a trading range properly. If you're looking to go long in the trading range, you want to make sure that you wait for a higher low to get established first, and then you go long and look to take prices all the way back up to the top of the range. If you're looking to short a trading range, you wait for the top of the range to be hit, you wait for that first lower high to get created, and then you short that lower high in expectations of prices coming back down to the bottom of the range. And I also hope you guys learned a lot about adding to your profitable positions, because when you're in a profitable when you're in a profitable trade, you want to make sure that you don't just blindly add to it because you see that it's working and you say, oh yeah, I'm just gonna put more into it. No, it's not about that. You still have to make sure that you get in from the right possible prices at the right levels every time, no matter if you're already in a position or not. So that's all I got for you guys today. I'll be back tomorrow to finish off the week. It's a short week because of Thanksgiving, so I'll be back tomorrow, November 22nd, 2023, ready to run it back again with you guys. I appreciate you for tuning in today, but I'll catch you tomorrow. So until then, have a good one, study hard, and take it easy.